My recommendation would be to do your due diligence when looking at... Whoa! It's interesting. Whoa! Oh my gosh. Alright, down the hatch it goes, my friend. $3,000 or $4,000 that I put into there when I was first learning. Oh my gosh! What do I think of Patrick? If you guys... Whoa! Lone Wolf with another $10 donation. I think he's drinking more than I am because he's throwing these donations out, but thank you. But the... Oh my goodness. Lone Wolf is going crazy here at 10 p.m. Everyone spam GGT. Well, you got to start it, Christopher. That's okay, though. Oh my gosh, here it comes. Your Twitter. I think Lone Wolf might be slumped over his keyboard just hitting the repeat button. Oh, you gotta be kidding me. No problems, Yishan. Don't worry about it. I'm probably tired of drinking anyway.
What's up, everybody? It's Jonathan from Lone Wolf Day Trading, and I have to say thank you, Garage Day Trader, for being a good sport. It wasn't just my donations; there were other people, so I know you had a good amount, and I really enjoyed the live stream, and I'm sure everyone else did. You know, so that's really what it's about. One thing that you did mention is, you know, with those donations, I could be giving people, you know, I guess a month pass to your live chat room. And, you know, it's a good idea. So, you know, for what I'll do for this is the first 3 people to comment down below referencing the chat room, they'll get 1 free month to your chat room. So, you know, it was a good idea. And, hey, you know, I want other people to see your chat room because there's a lot of benefits to it. Now, this video is solely being created for Hips. Hips requested this. And said that he wants to know what I truly look for, you know, when I wake up in the morning. What am I looking for the stocks? I mean, am I looking at them like 5 minutes prior? Am I looking at them hours prior? Just a rundown of the whole thing. Now, I did create a video of this probably about a month or so ago, but it didn't really go into great depth. So for this video, I'll really go into great depth of what I'm looking for and the winning stocks, you know, just basically breaking down like the analysis of how I know they'll move a certain way. Because if you see my past videos, I actually give, you know, an idea in the Discord, you know, about 5 minutes before market open, and it does occur, you know, because once you've seen the patterns, they do tend to repeat. So, you know, let's get into it. So before I even go to bed, at night when I come back to the apartment, I look at the stocks that have moved. What I do within my broker, and I'm sure it's available on different ones, they might just call it something different. Within TradeNet, it's called the top 20. So I'll go to the top 20, and basically what I look at is the top gaining stocks. And that's really about it for me. So I'll go to this one, I'll look, okay, it's up 31%, I don't care about that. Look at this one, up 100%. Okay, doesn't really look like it has any background, so it's probably just a recent IPO. So I don't really want to mess with that too much. Okay, this one's overextended, so this one's interesting. And basically what I'm looking for is that pullback. So 2 stocks that I actually called out on Friday within the Discord. The first one was ANY, and the other one was TNXP, I believe. TNXP. Yep, so both of these I called out and I said that they would go down. And they both did. As you see with this one, it dropped down about 1.5 points, a little over 1.5 points. ANY, This one dropped down as well, about 1.5 points. So both of these, as you can see, A and Y had the reverse split. So it goes from being 35 cents, it goes all the way up to $8.70. And then T and XP had a reverse split as well. So you can see with these huge gaps right here. So that's one thing I look at before I even go to bed. So what happens is when I wake up in the morning, normally around 6:30, I go to the stockmarketwatch.com. Now within the stockmarketwatch.com, I click on the pre-market. And then what's going to occur is the top gaining and the top losing stocks are going to pop up. Now the biggest thing that I look for is something that's just out of the ordinary. Now this is from Friday. So as you can see with TIK, it was up over 110%. This is probably something I'm going to look at for trading tomorrow. Probably try to get it for the pullback, depending on what the price is now. I haven't even paid attention to it, but TIK is out of the ordinary, 110%. So that could be something that it may bleed for the rest of the day, but there will be some type of pullback that's going to occur. Another thing that I look at is how much volume is there. Now, depending on what time I look at, if I look at it at 6 in the morning, I'm not expecting a lot of volume. But if I'm looking at it, 10 minutes before open, I want at least 400 to 500,000. That's just going to ensure that it's not choppy. It's just a very smooth graph. So if something's under, like if something's 100 or 500, I'm not going to look at that. That's just wasting my time. Even 14,000, nope. 42,000, nope. When I'm looking at stuff that I want to short, I'm looking for something that's not too high. I don't want something that's down 50% in the pre-market or 25% in the pre-market. That's still too much. Something that's around 5 to maybe 15%. That's still a little too high. So something that's around there, just because I know it's going to want to fill the gap. So if it's down 50%, it may just continue to go up for the rest of the day. And, I'm not really looking for that. There might be a quick spike at open, a quick drop, and then it goes back up. But basically, I'm looking for something that's down, a good amount. So maybe like 7-8%. Has almost 500,000 in volume. And we could also look at the gaining side if you wanted to go long a stock. So with 110%, I'm pretty sure there would be, actually, I think, I haven't even looked at it, but I think there would be some type of pullback at open. All right, so TIK had the huge spike up, comes up here, 540, 570. So, yeah, it looks like it just spiked up, had another spike. It didn't break the high, though, and then just continued down, kind of plateauing for the rest of the day. So 110%. Why does it pull back when it's 110%? Okay, people that bought it in the pre-market, once the market opens, they're selling it. There's sellers there. People that aren't in platforms like this, people that actually go through their bank, they look and they say, oh, my stock's up 100%. Okay, I need to sell this. They call their bank and they're like, okay, your order will go through at 9:30. Okay, 9:30. So then once 9:30 hits, those people are getting out. Also, shorters see how overextended it is, like I would see. I'm like, okay, this thing's up 100%. There's going to be a lot of selling because there's buyers that are selling it well. And when people are joining in with you, then it's a good sign that you're probably going to make profit on it. So then they're selling it to get into the short. All this selling is occurring. And that's why you're getting these huge drops, like right here. You get a pullback at open. So that's one thing that I look at as a shorter, is something that's up a ridiculous amount on the day. Okay, so once the market's open, I don't normally do this, but you could go to the top stocks if you wanted to. You just click on top stocks instead of pre-market, and it's going to bring you to the different exchanges. It's going to be the percentage of movement. So 270%, but that's a penny stock, like definitely a penny stock. You also have the losers right here. And then back to what we were talking about earlier, the top 20. The top 20 for TradeNet, it's going to refresh when the market opens. Sometimes it does it before, but unfortunately, sometimes it's just a pain. So then what I'll do is I'll scroll through and I'll look at where the stocks are going. Now for myself, this isn't, your trading style doesn't have to be like my trading style. And, and I trade different. A lot of people, like if you see my past videos, I'm shorting into spikes, and people are like, oh, what? This guy doesn't know what's going on. And people have their own styles. You look at Clay Trader, he's averaging, and people have stuff to say about that. But if you look at his monthly percentage, he has like maybe a loss or two for the entire month. So it works for him. It wouldn't work for me, not the way that he does it. Mine's slightly different, but it's really about just what works for you. And some people can't get that through their thick skulls, but whatever, not my problem. Okay, so I go through the losses. For shorting, I go through losses. Yeah, I'll look at the gaining, but the only time I look at the gaining is right before open. So if we were looking at something that was up a crazy percentage, like, I mean, that's an IPO. It's not really a good example, but something that like we were seeing earlier with over 100% TIK, I would look at TIK and then I would see how it reacts at open. Now for myself, all my trading, about 95% of my trading, takes place within the first 15 minutes of market open. So you'll see my videos where it's just like, 1 minute trades. I really just keep it simple. A lot of people have Fibonacci's, they have all this difference. They have this, they have some line here, Fibonacci's somewhere over in this area, and they just have all this stuff going on, and that may work for them. I'm not saying it doesn't work. If it worked for them, then that's fine. But for me, I just keep it very simple. All I need is the VWAP, the red line, and the blue line being the moving average. If I could delete this, that'd be awesome. Those are the only two things I look at. My chart has barely anything on it. The VWAP, of course, is the most important. You have to have the VWAP on there. And people say you don't have to. Yeah, I would highly recommend you have the VWAP on there because that's where the institutional traders are. That's where the shares are going to be. So people are looking at that. I mean, you see right here, hit the VWAP, bounces up, becomes overextended off the VWAP, comes back down, hits the VWAP, then bounces back up. So knowing that VWAP where that's located is just a really good idea. It's gonna save you a lot of trouble. But yeah, looking at the top 20, I'll go through, I'll scroll, and basically I'll do it real quick. A lot of people need a lot of time to really analyze the charts, and I don't. So I'll go like this. I'll have, okay, that, yeah, and then while I'm scrolling, what I'm truly looking for is I want a stock that's down on the day. So you'll see it right here. I want to see it going up. I want to see overextension because I want to know that it's closing the gap. And people may ask, what gap are we closing here? Okay, so if we take a look at LH, I just landed on that one. Basically, we have the low of day right here, 157.59. Let me just put in the stop order. So 157, what was it, 59? Yep, 157.59. We'll just put it there so I can remember that. Okay, so see how it goes down. I'm not going to get in the trade until there's some type of pullback. Now for this one, we don't have too much of a pullback. As you see, the closing price is right here. But you do see the wicking candle, so I bet you Monday, this one is going to be going back up to close this gap that was right here. I could be wrong, but that's just what I'm thinking because I do see this wicking candle. There was good buying pressure. It didn't go all the way down and then just close like right at the bottom of the candle. So if we scroll through a little bit more, let's see what else we can find. Now, one thing that, like I've said, people will say, why are you shorting into the spike? This is a good example here. So basically we open right here. This is where we opened. Then it spikes up all the way from opening at $12.99 to a high of $13.49. So it spikes all the way up, and then we have the pullback. There's always going to be some type of pullback. Now for myself, we have the high right here of $13.02. Right after that, we have a high of $13.30. Right after that, we have a $13.49 high. It's just a high after a high after a high. And when a stock is breaking a high after a high, like the candle, every next candle is a high, it's becoming way overextended, and there's going to be a pullback. Reason being is those buyers, they have to sell. there's going to be some time they sell. People that bought down here, they're going to want to sell when it gets up here. They may even sell it before it gets there. Also, shorters are looking at it, just like myself. I see how overextended it is, and then I want to short it. Now, the stock that I had the other day, all right, so this is the stock that I was looking at where it wasn't tradable. I wonder if it's tradable now. Nope, not tradable. So what occurred here is it went all the way up to 375. I actually tried to get filled at 370. Didn't work out for me. But from it opening at 350, going all the way up to 375, people are going to say that was 25 cents. That's not a lot. For this stock, that is a lot. This stock is, you know, sub $5. I mean, it's only, right now it's around like almost 385, 388, however. But 25 cents is a lot for this one stock. So when I tried to get filled at the 370, I mean, it went all the way down here to a low of 317. I mean, a little more than 50 cents, and I was trying to get about 2,000 to 3,000 shares. So, you know, it happens. But just looking at this stock, we can see that the wicking candles, that's another thing you want to look at, is wicking candles. So when I'm scrolling through, when I'm looking at a stock that's down on the day, I want to see it's pulling itself back up to fill that gap from the previous, fill the gap that was created in the pre-market. And once that's filled, more than likely it's going to continue to go down. Now, one thing that a lot of people don't pay a lot of attention to is how much is it down as far as, like, how close is it to becoming green from being red. Now, if I look at a stock, let's go back to the top 20. All right, so if I'm looking at a stock that's down 32 cents. So if it opens and it's down 32 cents, more than likely when it opens, it's going to pull back because, again, all the shorters are taking profit from the pre-market. All those buy orders are going through. People see that it's down more than it was the previous day, and maybe they want to do a dip buy. They want to average their loss. So a lot of people are going to be buying, and next thing you know, it goes up 40 cents, and it turns into green 8 cents. So now it's green for the day, 8 cents. You don't want stocks like that. Reason being is if you see a stock that goes from green to red or red to green, more likely it's going to be a little unstable. And why is that? Because when it's green, people are going to see that it's green, and the buyers are going to want to go in, push it even higher. Now, when it's red, the shorters are wanting to come in. Now, when it's bouncing, there isn't a good, you know, like there isn't a lot of shorters, there isn't a lot of buyers. It's not like, you know, one side's taking control of the stock. It's evenly spread. And that's not going to help. So when I'm looking at stocks, I like something that's down, you know, maybe like $2 or $3, depending on the size of the stock. So that's why I'm saying in the pre-market, I'm looking for stuff that's about 5 to 15%. Because then that's going to tell me it's going to pull back. There will be a pullback, but the pullback isn't going to turn it green. So once it goes green, I stay away from the stock. And that seemed to work for me. Now, there are certain cases where something pulls back just a crazy amount, like Tesla. Tesla, a few months ago, it actually pulled back a large amount, and it turned green, about $1, from being red, and then it sold off for the rest of the day, going back about green $5, or going red $5. So there's certain cases where it doesn't, but about 95% of the time, you know, if it's going red to green, green to red, it's going to stay there and probably just go sideways for the rest of the day. I hope you all enjoyed this video. Again, I keep it very simple. By the time I wake up in the morning, I look at the stocks and I just kind of glance over them. And then once I actually get into my platform, about 5 minutes before market open, I'll look at it again. And then market opens and I'm done trading within 5 minutes. I just keep it very simple. I don't get into the whole, you know, making the Fibonacci and I need like the 10 moving averages. I don't do that. I keep it very simple because once you start to complicate stuff, then, you know, it's hard. All I need is the candlesticks and just a couple of factors in there. But just for myself, I just keep it very simple. I'm not trying to spend the whole day in the market because I believe after about 10:30, 11, the market just goes sideways. A lot of the movement is within that first 30 minutes is because that's where a lot of the very experienced traders are going to be because they know that's where the volatility is. That's where you're going to be. That's where the largest swings are going to occur. Is it more risky? Of course it is. But with more risk comes more reward. And once you start to see the patterns, again, understanding of, okay, this stock is probably going to have a pullback. You know, it may not have a pullback, or if a stock's up green for the day. One thing that you will notice, and this is what I noticed as well, For stocks that are up a large amount, green, you'll see there's going to be a large pullback around 3 minutes before market open. That's just something that I've recognized over the time I've traded. Now, for the stocks that don't have a large pullback before open, more likely you're going to see a spike at open, and then it's going to pull back. That's just something that I've seen. Maybe you'll see that for yourself, but that's what I keep in mind, because when I was with SureTrader, I would always watch that, and I would be done within the first 1 minute candle, because I would see the certain patterns. I would go in about 2,500 shares, and I made a good amount of profit. Was it really risky? Absolutely, it was really risky. I don't trade like that anymore. But as soon as market opened, put it in the order, boom, done. I made like $800, and okay, I'm done for the day. And everyone else is staying in market until, almost 30 minutes till close, and I finished in the first minute. So it's really however you want to tailor your trading. Again, there isn't a one answer. It's not like you don't trade like this, then you can't be profitable. It's going to be different for everybody. And that's what people need to keep in mind. Is not the same pattern and the same technique and everything like that is going to work for the same person. So again, I hope this video has helped. If you have any questions whatsoever, please feel free to email me. Leave a comment below. Don't forget, the first 3 people that comment referencing GDT's chat room, the live chat room, will get a free 1 month subscription to it. So definitely, his chat room is phenomenal, to be completely honest, and to be unbiased. I mean, I've been in a few chat rooms. One chat room I was in was like $500 a month. So GDT has a very fair price when it comes to his chat room, and he offers a lot. And I truly respect him for doing that. So again, thank you all so much for viewing. Thank you for the support. Almost had 250 subscribers. I'm excited about it. This is Jonathan with Lone Wolf Day Trading, and stay green.